Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to today's Thursday, the 1st of June, first of the month. Thursday, the 1st of June, Bull versus Bear webinar. Steve Miley here on the call for TradeDay.com. Welcome, everyone. We're going to go for a usual regular run through in here today. But before I do, just to remind those of you who are thinking of converting across to maybe take the $50,000 challenge. We are running the sale just on that $50,000 challenge at the moment, the evaluation. So if you are thinking about going onto it, that sale will expire tomorrow. Okay, we'll send a reminder email. Remember, it's code Memorial23 for the Memorial Day holiday. Memorial23, the year being 2023. So please do sign up in the next 24 hours if you want to take advantage of that sale. Okay, so sales pitch over. Let's go and take a look at the calendar, what we've had, what we've got coming up. We'll take a look at the macroeconomic fundamental events that are shaping markets right now, taking a look at the articles from the major news wires, and then we'll take a look at how those are impacting on the charts on the major financial markets that I know that you guys are trading. So first of all, let's look back before we look forward. Now, obviously, the big focus yesterday was on the debt ceiling. It ends up getting past, let's face it, relatively easy, after all the shenanigans. And the vote went through fairly simply. And now it goes to the Senate, where it's expected to effectively be rubber stamped with the Democrats in charge there, having control there. And then Biden will sign it into law. So no debt default, debt ceiling pass. Now, I did say yesterday there was potentially going to be a buy the rumor, sell the fact. Well, you know what? The market had been drifting lower ahead of that. Initially, obviously, we broke to the upside. Both from last week on NVIDIA, plus, over the weekend, it seems that the debt ceiling deal was being done. And then the last couple of days since we've reopened since Memorial Day, the market's kind of drifted lower. It's not been an aggressive push lower. It's been a drift, more than anything else. And I think that was a little bit of sell the fact going in there. And then after the vote, the market, pretty much, didn't move. There was no real moving significance. Since the vote, though, on the overnight and going into the day, there's a slight positivity to markets. And some of that positivity, though, coming out of Asia, coming out of Europe. And I'll talk about for why on those. Plus also talking about the Fed speakers. So yesterday we had Harker and Jefferson talking on the wires yesterday. Let's go and focus on them. So in 5 things to start your day here on the second. So they're talking about the debt relief. Okay, done deal. Fairly big. 314 to 117. Easily passed. Goes through. Blah 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 blah. No worries. But the Fed speakers in here. So we had Jefferson speaking, who was often seen as echoing what Powell says in here, basically saying, all right, we're going to probably be now on hold, right? So we've had this kind of, were they going on hold? Was the rate hike cycle done? Are they going on pause, or are they going to do this skip? Well, he's basically now effectively saying, we're kind of done, right? For now, but it might be a skip and we might go again. And that's echoed in here. So, and also that what that means is, the jobs report is, he's effectively said we're not going to go in June. So, it makes the jobs report that we got on Friday, not that impactful, because they're already saying effectively we're going to be, we're not going to go in June, but we retain the option for hiking in further months, So, that's the kind of what we had coming through. And then what that meant was, and we'll go and take a look at the CME tool, but this is basically, coming from the CME tool in here, you see a big spike, tightening price for June, a big spike lower for June, and then we've been spiking higher for July, and even a little drop for July. So we'll go and take a look at those on the CME tool. But basically a relatively dovish tone, certainly with regard specifically to the next meeting. If we go and look at the June in here, now what you see now, I've seen this as high this morning. I was going to refresh it. I've seen this up above 70% in here today. So for the where are we? So 69%, at the moment for unchanged now, right? And only a 30% chance, pretty much, of us having a rate hike at the June meeting. But we go to July, and it's kind of still pretty much nailed on. We're going to get a hike of some sort. 50% 50%, or close to 50% saying, 25, but we might have as big as a 50. Okay, and only like a basically just above a 1 in 3 chance that we stay unchanged in July. So the market's now pricing in no cut hike in June, but definitely a hike in July, or a very strong chance of a hike in July, and maybe a bigger hike in July. And if we go and take a look at the historical for June, just what that other chart was showing there on the historical for the 500, 525, and then just getting rid of all these others in here. So first of all, in the 500 to 525 in here, what do we see? Let me see. So the 500 to 525, a big spike high. So very unlikely in June now that we're going to get a rate hike in June. Pretty much, getting back up to close 70%. And if we go and look at the 525 to 550, that's been pushing higher and higher and higher, that we're going to get, banged on a rate hike. A rate hike in June, above 70, getting up towards 70%. And now, that's absolutely collapsed on the 525 to 550. So just echoing, reflecting the opposite effectively of what we're seeing in here on the 500 to 525. But if we go further out on the curve in here, it's still pricing now year end. In here, we're kind of 50-50 really between a hike and but slightly edging now more towards a cut. So if you look in here, 33, 43, 48, well, actually, no, we're not, that's pretty much, is that bang on 50, 33, 43, 48, you're just over 50% that way, and then 32, 44, 46. So we're like kind of low 50s to, high 50s to low 40s. It's kind of, flick a coin in here at the moment of whether we get a hike or whether we either stand pat or get stand pat and get a hike, or whether we get lower rates in here, slightly edging towards a 1 rate cut by the end of the year. But remember, that's not 1 rate cut, because the chances are we're going to be actually higher in rates in between. So it would actually be 50 basis points down in here. So not 50 basis down from here, 50 basis, I'll get it right in a minute. Up 25, down 50, so net down 25 by the end of the year, but only slightly, only slightly. So the curve is kind of shifting around a little bit in here, but now really, the comments from yesterday have taken a rate hike pretty much off the table now by the looks of it for next month. It's actually this month now. We're in June. Right, you know what I mean. Okay, AI. So Nvidia dips lower yesterday, but 5% down, but having gone up 30%, so not the end of the world in the end, and pulled the Nasdaq a little bit lower with it, and stocks a little bit higher. I mean, the overnight in here. So we have had a couple of important things from Asia and then Eurozone in here. So Asia, this is the non-official PMI. Remember, we had the official Chinese PMI, which was worse than expected. This is the non-official PNI that comes out from HSBC, I think. Yeah, this CAC number from HSBC in here. So that beat expectations. So that was a positive overnight. And then also in here, we had Eurozone data in here. So you can see in here, futures at highs, debt ceiling passes, but also in here, look, stocks climb on debt deal, but also softer inflation. That's from the Eurozone. So if I skip ahead to, this was all from yesterday. If I skip ahead to today, what we see is this Eurozone data. Remember, we looked yesterday, just skipping back to yesterday, we had the French data was better than the French CPI data, better than expected, and the German regional data was better than expected here. And then in the end, the German overall data was better than expected. Okay, and then that's been echoed and reflected by today's Eurozone as a whole data, CPI better than expected. Now, despite that data being better than expected, and that's helped stocks. European stocks were down on their lows yesterday. We're in 2-month lows. Considering the Nasdaq's been at multi-month highs, the European stocks have been performing, certainly underperforming, because the ECB later in the rate hiking cycle continued to hike rates. But that data in here has helped European stocks rebound in here this morning. We have seen a European stocks. So Eurozone inflation tumbles, fueling ECB rate debate. Well, it's fueling a rate debate, but Christine Lagarde's come out today and stayed fairly hawkish despite that European data. So we've had some hawkish comments, but nevertheless in here, look, Euro area core inflation eases but won't stop ECB hiking. So we know that, but the market is taking some positivity. So European stocks rebounding in here. ECB is ground to cover. There's Lagarde, but policy is working. So despite the data being better than expected in here, a pushback from the central bankers in Europe, but nevertheless in here, Eurozone inflation, falls more than expected. Core pressures ease. That's taken the pressure off that. This has got, you have to look at it as, even though the central bank may stay hawkish, it's going to mean that there's less likelihood that we're going to go into recession. The inflation data is coming back the right way. Okay, so that's positive for Eurozone stocks. So Eurozone stocks have been rebounding in here this morning, and the stock indices up. The UK data, actually, the UK FTSE, the UK index in here, not doing so well today. It is rebounded, but very slightly, having been selling off more recently. And the UK PMI data, not so good. So going back to today, looking ahead, so we've had this the Chinese PMI better, European data kind of mixed, but slightly better. You see French manufacturing slight miss, German beat, powerhouse of Europe, Eurozone as a whole beat, UK PMI, which is not on there, but UK PMI was worse than expected. So now, and obviously the European CPI data better than expected. So now looking ahead, what have we got? Well, we've got obviously the PMI, but just before that, in just over half an hour, we get the ADP non-farm employment change. Remember, this is the precursor to the official report. The official report comes out on Friday. This is a private report in here. It's a guesstimate of what the official report is going to be. And this ADP non-farm employment doesn't usually move markets massively, but does move markets to some extent. And then also it's coming through a day later. Usually we get this on the Wednesday before the employment report. It's a day later because we had the US Memorial Day holiday on Monday. The employment report is still the last Friday of the month, but this data is back one day. Usually comes out on a Wednesday. The ADP data now coming out today on Thursday in just over half an hour. Then the focus will switch to the PMI data. So we get the S&P global data at 9:45, okay? But more of the focus, remember, when we get the flash PMI data, we don't get the ISM data, so that's more important to watch. But when we get the actual official ISM data, which is 15 minutes later, that's more important. So the manufacturing PMI data here from S&P Global is at 9:45 Eastern, less likely to move the market. More of the focus on the 10 o'clock data, which is the ISM data today. We do get further Fed speakers, so we've got the energy data in here. If you're trading oil or gas, get the energy data which we get weekly anyway, 11 o'clock Eastern. We get Harker speaking. Harker spoke yesterday, so are we likely to get any kind of significant impact from that? Unlikely. Okay, so really the focus today on the ADP data in just over half an hour, and then we get the 10 o'clock ISM data is the main focus, but we do get the S&P Global 15 minutes before that. So that's the focus going into today. Just recap on stocks in here overnight. So Asian stocks, the Nikkei has done particularly well, really strong rebound in the Nikkei. Chinese markets, Hang Seng in here, little change. European stock averages are up with that better than expected CPI data, plus on the back of the US debt ceiling in here, plus on the back of positive PMI data. So European stocks are up. The FTSE underperforming the UK market because of that UK PMI not doing so well. But the DAX, the German index, surging back higher, coming off a 2-month low. Yesterday, up over 1% today. And the French index, the CAC, is up 0.75%, and rolling into today, this hasn't updated. Terrible job by Reuters, but the stock futures in the US slightly higher in here going into today. So we've already looked at the CME Fed tool. Just a quick note in here on bonds. I thought we'd see bonds up significantly lower in yield. They've been rolling lower anyway, so we've already had a little bit of that. Buy the rumor, sell the fact in here, or sell the rumor, buy the fact in this case. But bond yields actually nudging a little bit higher in here today. But nevertheless, what we're seeing here on the stock side, stocks have been drifting low. It's not been an aggressive sell-up, but certainly low the last couple of days. And this was obviously, we were down lower ahead of the debt ceiling, and then rebounded slightly and continued that rebound. This is on the S&P. And for me, it kind of stays bullish in here. We're already breaking back above this little internal trend line. We're breaking back above that already in here overnight, above there. I think if we can get above 42.04, this looks a lot more positive, and certainly through 42.10, a lot more positive. So playing this again back in here from the long side. On the NASDAQ in here, it was, we did get that negative candlestick, that doji candlestick 2 days ago, down yesterday, but not a massive day. Nvidia kind of saw some position squaring, I think, in Nvidia, and some profit taking. So Nvidia dipped yesterday, and it was ahead of the debt ceiling. But then look, a little bit of a bounce coming through in here. And NASDAQ in here, You've got the little internal trend line here on the NASDAQ. You can draw the one off the high here, which we're already through, just through. We've got the little internal one that comes through across here, which we're not through. Okay, so trigger points on the upside for the NASDAQ through that little peak there would be a bit more of a reinforcement. That is up at 14,365, and then critically above that, kind of peak from overnight / yesterday, which is up at 14,412 and a quarter. So 14,365, and then through like 410, 415 would be the bull signals there. And we're sitting just below that trend line in here, which comes in around 14,340 at the moment. Okay, so those are the upsides there. Let's have a quick nod to the commodity markets. So first of all, oil continues to be negative in here. We have an OPEC Plus meeting at the weekend, so trading heavy, looking even heavy today, having tried to rebound. No kind of fails the rebound, fails at this peak, lower, another lower high, sitting just above support around 67.50, and then the low. This is and 67.00 looks negative to me. Gold doing a little bit better in here. Oil in here, we've got shooting star pattern, negative pattern on sorry, I'm going to start again. This is the dollar index. Dollar index, negative shooting star pattern. So 2 days ago, actually 3 sessions ago in here, we had a bearish engulfing pattern, right? So that's negative in here from the high. Then we get a shoot up again and negative again, shooting star, and again another shooting star. This looks like a top forming. So down below this little low in here on the dollar index would open up. So the low from yesterday is at 103.935. Down through there opens up this low and this low. So this looks like a topping pattern in here and does look quite negative for me. And if this goes lower, we're more likely. So that's going to put us likely into risk, continue to go into risk on environment. Remember, dollar's been rallying because of concerns about the debt ceiling. That's kind of out the way now. Do think there's real risk that we go back lower in here. Plus dollar rallying as well because of the more hawkish shift by the market in reaction to the hawkish Fed, the Fed staying hawkish. So I do think there is risk that this rolls a little bit lower. And if that can roll lower, then it's going to be, you can see gold rallying in here. A bullish pattern 2 days ago, higher again yesterday, dip and a rebound. So gold looking fairly positive in here going into today. So gold above 1973. I think I'm on the wrong contract in here. I think we're rolling contracts onto July. So I'll have to update that. But yeah, gold looking more positive as well. All right, guys, any questions? If not, I'm going to wrap us up there. Anything from anyone? Please do feel free to ask anything, and it doesn't necessarily have to be on this straight stuff. Please, I don't want questions on how do I set up my Ninja Trader platform, not that kind of stuff. Okay, you put that into a support ticket. But if you've got any questions on the markets and what's going on right now, please ask. No? Okay. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe. I'll be back with you tomorrow with another final bull versus bear webinar for the week. Bye.